Facebook world. Welcome to 39.6 Facebook Live show, where we talked about how to make your money work for you so you do not have to work for your money. Today's topic, a 403B with a solo 401k. Where did Pinky go? I'm sorry, we do not have Pinky at the moment. I was just trying to get this ready to go before the sunset. This is the first time we are doing a show, actually before Shinola goes to sleep. We had some beautiful lighting. I said, let's just try to get this show going. So no Pinky at the moment. That's okay. We're just going to take this show and start going with Facebook episode number 21. All right. Today's episode, we are going to be talking about, one second. We are going to talk about 403B and a solo 401k. All right. So this question came from the White Coat Investors Facebook group. Question about a solo 401k. I have a full-time W-2 job, and I just started working a little bit of 1099 income on the side. By the end of the year, I'll have about 60 to 100 hours. Am I allowed to open up a solo 401k for this work? And how much can I contribute? I have already maxed out a backdoor Roth IRA as well as my 403B. Okay, so this is a very common question. So you have a physician like my wife who works for a nonprofit and has a 403B at work. I am trying to get this lighting a little bit brighter, just started to get a little bit darker. All right, so I think that might help a little bit. We still have some of the golden lighting from the sunset. And that may dissipate over the next handful of minutes. Hold on a second. There we go. All right. There we go. Okay. So there's some orange lighting. Okay. So a 403B and a 401k, a solo 401k. So a very important thing here is to know how much money is going into the 403B. The person says that he is maxing it out, but that can mean anything. That could mean $18,500, which is what people usually say. That's the employee deferral. But remember, there's the employer match, okay? And the total amount can get up to $55,000 between those two pieces. Now, if you're 50 years or older, it can actually be $6,000 extra on the contribution from the employee. So it can get to $24,000 or go all the way up to $61,000 if you're age 50 or older by the end of the year. Okay, so this person is not 50 or older, and he says that he maxes it out with $18,500. So I asked, well, how much is the employer adding? Because that's a very important amount to know, because we have to know how much space is left from that $55,000 limit. And I'll get to that in a second. So the person says 6% of his income will be matched by the employer as the employer contribution. I don't know what he makes. I don't know his specialty, but let's pretend he makes $200,000 a year. Now, 6% of that would be $12,000, which would mean that the employer is putting $12,000 and then he's putting in $18,500. So these two combined would be $30,500. Okay, so I'm just going to write this down so that I don't forget. Okay, $18,500 and $12,000. And so for those keeping score at home, that's $30,500 is getting into the 403B. Okay. Now this person also has a side gig. Let's pretend this person does like Facebook Lives and actually gets paid for it. Okay. So now this person is earning side money. Now this person says he's doing 1099 work. So basically working as an independent contractor for, basically as a physician or whatever his specialty is, and going to work, so it's 100 hours. So let's pretend this person's going to earn another $20,000. Okay, so we're gonna say $20,000 of 1099 income. Well, the first question is really, can a solo 401k be made? Absolutely. If you have income as a 1099 as an independent contractor, yes, you can open up an individual 401k, what is often referred to as a solo 401k. Okay, but the IRS calls it an individual 401k, the same way an IRA is called an individual retirement account. It's attached to your name, to you, not attached to a married couple or a bigger business. It is attached to you, but you happen to own your own business. You're an independent contractor. Okay. Now, if you are an independent contractor, you should get an employee ID number and EIN for your business. That is different from your social security number for yourself. You don't necessarily have to do that, but it's very easy to do. You can do that like on the IRS website. It takes 5 minutes, and you just basically get a new tax ID number, and it'll just flow to your tax return on Schedule C as if you didn't have a new tax ID number, but it helps keep your business income separate from your personal income, at least the way IRS receives that money. Okay, so this person's going to receive $20,000 of 1099 income. And yes, you open up the solo 401k. You should do that as soon as possible. The deadline to open it up is December 31 of the calendar year of which you receive the money. That's different from a SEP IRA, which you can open up the following year, basically up until the tax filing deadline. So if you've already passed the year, you can't open up an individual 401k. But if it's still the current year, then open that up and get it up and active as soon as possible. Ideally, like right when you start earning the money, okay, or even before, or like right at the very beginning. Okay. Now, he says he's already maxing out the $18,500, which is the IRS deferral limit for 401ks and for 403bs combined. Okay, so this person's not going to have both a 403b and a 401k, but the money that comes from the paycheck and goes in directly into that retirement account, the combined amount is $18,500. He already put $18,500 into the 403b. So there's no more room for elective personal deferrals into that solo 401k. So that solo 401k can only receive the employer portion, okay, the match, okay, but it's not really a match. I don't really like it when people call it a match. It is an employer contribution, okay? Here, it's not really a match. There's nothing to match for because it's zero coming in from the employee and all of it will be coming from the employer. Now, the question is then, how much can go into the solo 401k? And that is a very confusing question because a lot of people get confused on this because there's multiple different answers and it just depends on your situation. So first, you need to know how you're filing your taxes for your 1099 income. Are you filing it as a sole proprietor, which a lot of people do when they're starting out, especially if it's like a low income side gig, like earning $0 doing Facebook Live episodes, okay? That would be often a sole proprietor. You don't file a special tax election to be taxed as an S Corp or filed as a C Corp, okay? But if you're filing as an S Corp or a sole proprietor, it's different, okay? We're gonna focus on just doing it as a sole proprietor right now, which is the easy way. So basically, if he earns $20,000 of sole proprietor income and has no other business expenses, okay? So all of that money would be considered profit to the business. However, you still have to pay Social Security and Medicare from both the employer side and the employee side. And if you recall back to my first episode on taxes, we discussed FICA taxes, Medicare, Social Security. 6.2% Social Security, 1.45% Medicare for each side. Now, this person's already earning, we're saying about $200,000 at the W-2 job, which means that the Social Security amount has already capped, okay? So if you're filing your side gig as your 1099 income as a sole proprietor, there's no more Social Security to pay, okay? If you are filing as an S Corp, the employer actually still has to pay that 6.2% all over again. It has no idea that you're earning money from another job. So you actually are going to go over the amount that you need to for Social Security. So that's a very important point for a side gig. You don't want to pay extra Social Security. Okay. Now, the Medicare, you are going to have to pay Medicare on both sides, 1.45%. Okay. So that's going to have to get counted, and that's regardless of how you tax file. Now, it gets confusing, but on your taxes, half of that self-employment tax, that 1.45% for Medicare, half of that is considered like a business expense, and it shows up as an adjustment to your income. And so that becomes tax deductible. long story short, the amount of money that you actually have as like your profits is not quite the total amount of money that you earn. It's slightly lower because you have to account for the Medicare portion, and then you also get this little deduction for it. So it's not exactly what you earned, okay? But it's slightly less. Now, how much could go in as the solo 401k contribution from the employer? As a sole proprietor, basically say it's 20%, okay? But it's 20% of the net profits after you've already taken that self-employment tax out of there. So it ends up being slightly less than 20%, ends up being like 19% and change. If you have a CPA or you do this in TurboTax, you can often just calculate that for you. But yeah, it'll be almost, but not exactly 20%. Okay, so the person earned $20,000 of income on 1099, had no expenses, paid Medicare. 20% of that would be $400. We're going to go a little lower and say $380, okay? Sorry. 20% would be $4,000. I dropped a zero. And 19% would be $3,800. So we're going to say $3,800 can go in to the solo 401k from the employer side. Okay, so $3,800. Now I add that to the amount that the 403B already received, which was $30,500. Okay, we said $18,500 from the employee and $12,000 from the employer because it was 6% of $200,000. So you add those two together and you get $34,300. So you can see my math on the screen if you are looking. Okay, there you go. So 30,500 plus 3,800 equals 34,300. Not very much math there. Now, you need to know what the IRS limit is. I think it's called the 415C limit. It's the total amount that you can put into a 403B from the employer and the employee, and a 401k from the employer and the employee and the employer. All four of those combined, okay? So you have 403B, employer, employee, and 401k, employer, employee. We've already told you that a 401k from the employee is zero, okay? Because that 18,500 got maxed. Now that limit is 55,000 for all four of those portions. And we added these up together and it was $34,300. So we're okay. Now, if the person earned a lot more money, if the person earned $300,000 on the 1099 income, okay? Well, $300,000 of 1099 income, you take 20% of that, it's $60,000. But there's also a little caveat. You can't take 20% of the full amount. The 20% gets capped at the IRS limit of $275,000, okay? Which is where the $55,000 a year total ends up being 20% of $275,000. It's confusing. I know I don't make these rules, but you take your $275,000 of income, you take 20% of that, and the most you could put in potentially from the employer of a 401k would be $55,000. However, at the 403b, you already put in $30,500. So then you'd have $85,500, and that's over the $55,000 limit. So you would only be able to put in $55,000 minus the $30,500 that went in at the W-2 job. And that ends up being $24,500. So there's the math on that. Not very fancy. So if the person earned more could go in, but no more than $24,500 because it caps as a total at $55,000. Why is this? Now, this is like the silliest thing. There's a lot of really silly things when it comes to taxes and these rules. If the first W-2 job was a 401k for-profit company and not a 403b, this person could be putting in potentially $55,000 at each place as long as he earned enough money at each place. okay? Because the employer on the 401k job could do like $55,000 as a match on the solo 401k side. And then on the W-2 side, it could be like $18,500 from the employee. And if you had a good match, $36,500 from the employer, that would be $55,000 in each place, $110,000. Okay, but there's this special rule that you can't have two different 401k limits if the two companies are basically like related to each other. It could be like a father or daughter, like one company owns another one, or two sister companies where they basically share ownership. And so your W-2 job is probably not your company. Okay, your solo 401k job is your company. So those are two not related things. But there's a special rule called the 403B. It is, I don't know what it's called, but it's the 403B rule. Okay, if you read the White Coat Investor blog, there's a special page called multiple 401ks, and there's like rules for having more than one 401k. And there's rule number 7. Okay, it's the if you have a 403B rule, that 403B actually that limit combines 403Bs and 401ks. The government considers a 403B within your own control, even though that company is not in your control. Who makes these rules? Okay, I don't, but you got to play by them. So if you have a 403B and you've already done 55,000 in there, there's no more room for any 401k contributions. So if you go back to one of my earliest episodes, how to put in $73,500 into the University of Texas retirement system. I think it might have been episode 2, potentially. $55,000 goes into the 403B. As long as you're earning $270,000 or more, and you use up all of the 403B space they provide to you, you fill up all 55,000, which is what my wife does. So she cannot put any money into an individual 401k. Now, my employer is a for-profit facility, 401k income or 401k retirement account. So I can put money into a solo 401k, potentially up to $55,000 if my side hustle got me just $275,000. But these Facebook Live videos make me this much money. So 20% of this is how much I can put in based on this side hustle. Okay, so that's basically the same amount that my wife can put in because she has a 403B, 0. Okay, but that's the way it works. It's totally confusing, but yeah, if you have a 403B, be very cognizant of the total amount that gets in there, and do not let your extra 401k money, when added onto your 403B, exceed that $55,000 in 2018. Don't do that. Bad game. If you are starting a job as a 1099 contractor, what I would do is get your solo 401k open, and then I would just wait until the end of the year and then contribute it, or even just do it when you're filing for your taxes. Okay, you have until later to actually put the money in, but the 401k has to be established by December 31st. All right, and that is it. Bantu, just saying hi to people. Bantu, Kate, Amelia, we had a few other people. Vino was here for a little bit. Thank you very much for coming. That was Facebook episode number 21, and I'm glad we got a little bit of the cool lighting while it was available. And until next time, think about how you can make your money work for you so you do not have to work for your money.